Cool. We're recording now. So, yeah, back to your question, Tracy. To set an alert, I would just go to condition, pick K2 TS, trading strategy indicator, and then just put signal fired. So in this situation, you'll get an alert like how I do here. You'll get an alert if it goes either way. So I would set it to once per bar close, and then you can set any settings you want here. And then under the message, I would probably put, the pair name. So if it's a GBP CAD, K2 alert, or like 30-minute K2 alert, depending on, whatever type of alert that you're setting. Yeah, you can set it, to either buy or sells only, but I like to just have it to signal fired. So, regardless of whether it's a buy or a sell, I'll get alerted. So regardless, so like all of these, I would get an alert if it was a sell, and if it matches, then I enter a sell order. If I got this and I got, a K2 signal and it doesn't match, then this would be a good pullback entry. And it's the same here. We demonstrate pullback strategy. Yeah, sure. Sure, let's, Aaron, do you remember which one we took? Because we took one now.
This one right there, actually, on a pound. Would that be it? Oh, no, actually, that's not it. We called the pound CAD recently. Let's see.
This one, right? No, it doesn't look like it. Here, let me see.
I think it was the one from yesterday. We hit for like 100 pips.
Yeah, let me see. Let me see what other questions we got first. So we answer that question. KS. Can we go over what might happen to US 30 in the next week? US 30 is going to go to shit regardless. So let's see.
Yeah, US 30 is looking too good.
Yeah, I mean, I would only enter sell entries. I know some people in the group are entering buys to catch like the little pullback moves, but
well, it is on support right now. So, but yeah, it's going to tank.
Yeah, I think it's going to tank, honestly. Like, I would probably go on the bigger charts because there's too much noise on the smaller ones. But as you can see, it's been a crazy downtrend. So, like, people that are buying, I mean, you're going to be crazy if you guys are buying because you never know it's going to come shooting back down. But let me just take this off so we can see better. Yeah, so what I think is going to happen, it's probably going to come back, test the support, might retrace a little bit, come back down, break, and then go even farther down. I think it'll just keep going down. I don't see it stopping anytime soon. So personally, I wouldn't buy anything. I mean, best case scenario if you're buying, it might come down and test it. It might retrace up even farther because the previous swing is until up here. So until it breaks this, I don't think it's gonna go any higher. But I think it might test this right here and come back down. But since we're over the weekend, a lot of stuff happens over the weekend. Like a lot of crazy things happen. Like, Trump will say something crazy or, well, what's going to happen actually, I think, let's see, I know Wade posted about it. But there was something that was going to happen. Yeah, so Wade posted this saying that basically the Federal Reserve is going to pump $1 trillion into the market to stop the drop. So what might happen over the weekend is this is going to get pumped up to here. And then once it gets there, people are going to sell off like crazy. And it's going to be a domino effect where it just drops straight down like that. So for US 30, I'm anticipating it to drop more. And I'm just going to keep scalping it. Like I scalp it for like 100, not like 100, like 1,000, like 1,500 or 2,000 pips per move. And then I just stack up profits easily. So like, let me show you guys my US 30 profits. Like I never lose. with all these profits right here. I made, with a $500 deposit, I flipped that to 2,961. And then every day I withdraw maybe 1,000, 2,000, just to keep it at 1,000. Like you could go to all my, let's go to media. So let's check it out. Right there, I made a withdrawal. All the wins are like 100, 300, 400, back to back to back. And I just keep doing this. I just keep selling US 30. See all my posts, like straight winners. Like we could even go back to, these are Wade's trades. Let's see. Trying to figure out. I think this is, Aaron, is this when I started trading it?
I think that was Jalen's account.
Oh, Jalen's account?
Yeah. I think, okay, that could have been yours right there. Yep.
Because I always start with 500. All I'm risking is 500, and I'm trying to flip that to 1,000, 2,000 daily. So all I do is I sell US 30. I sell, you know, Australian 200. I put 500, made 455, flip that to 955. Same thing over and over again. This isn't mine, so I don't trade FX on there. I think that's Jalen's. Yeah, see, all I do, I short the indices. I short the NASDAQ 100, the S&P 500, the US 30, flip that to, you know, 1,000 in a day, in like one day. Let's see if I got, yeah, this is my account. So I drop 500 again. Like every week I just drop 500 and I'll flip it, 1,000. 500, flip it to 1,146, made 646 profit on that. I'm just shorting it.
Matt and Jermaine had another question.
Oh yeah, let me go back. Let me go back to this question first. All right, so Appen said, when you sign up for the 150, will you help us set everything up? Yeah, there's videos for everything. I'm also doing these daily live trading rooms and training. So if you have any questions, I'm available. So I could help you start it up, set it up, you know, learning how to use the exit strategy, like pretty much the whole course all in one. Like you'll have the course to watch when I'm not around, but I'm going to be live almost every day. So I can help you guys regardless. And like that 150s, you know, you're going to make that back in like one trade. So let's see. What else we got here? Tracy, can you demonstrate the pullback strategy? Yeah, sure. Let me go back. I'm going to try to find the pullback strategy that we entered. Or, I mean, it doesn't even matter, actually. I could just pull up any trade. So, yeah, so this is a perfect example right here. I mean, we could even start from way up here. This is actually better. I like it when there's a lot of space. Then it's easier to look at. All right, so let me type the requirements here. K2 Pullback Strategy. 1, K2 signal present. 2, K2 trend meter does not match. 3, price not within 10, 15 pips. K2 SR. All right, so the first requirement, there needs to be a K2 signal present. There's a K2 signal right here, the buy signal. But since it's opposite of the trend, this would be a retracement candle. It's not necessarily a buy candle, but it's basically telling you that, you know, prices are tracing or it's pulling back. So the next requirement is that the K2 trend meter doesn't match. So we have the K2 trend meter right here that's red, and then we got the K2 signal that's green. So that's the requirements for number 1 and 2. Those are both met. And lastly, you just want to make sure that price isn't within 10 to 15 pips from the K2 SR. So these are the K2 SRs right here. When it's like this, where the support isn't anywhere near current price, you're just going to go up on the further time frames. So you go up to the 1 hour, and then For here, this would be okay to enter because price already broke below, and for a pullback entry, we're waiting for momentum to swing back down. So it wouldn't even matter if it's up here because we're waiting for this to come back down, and if our order's down here, it's not going to trigger until it comes back down below. So let's go to the higher time frames because we don't have a good gauge on where it's at. So current price is right here, and it's about 40 pips away from the support. So this gives you enough cushion for you to enter because the entry would be somewhere around here. So this would give you enough cushion for you to at least enter and hit TP1 and then get out, or move your stop loss into profit. So regardless, as if it pulls back, you'd still get out either at break even or for full profit. Same here. You just keep going higher if you want to have better confirmation. Support's about 35 pips away, so that's fine to enter. Right here on the 8-hour, price is way below the support, and same with the daily. So this is a perfect entry for a K2 pullback. So in order to set up your stop loss and profit target, you're just going to zoom out, hit reset chart. You're going to put your short position to enter at the low of this current candle signal, which is going to be right there. So as you can see there, price is way up here. It's nowhere near entry, but what we're doing is we're basically waiting for price to come back down and trigger our order. So our entry is going to be right here at the low. So now, now we have this set up. So this is going to be our entry. This is going to be our stop loss, and this is going to be our profit target. So now we just got to wait for price to come back down, trigger our entry, and then make its way down to the profit target. So as you can see here, price still hasn't triggered, so we're not in the trade yet. So there's no stop loss that would have been hit because you're not even in the trade yet. There we go, it triggered. And then now you're in the trade. Now you're just waiting for it to hit profit target. There you go, hit profit target. Easy money. So if you took that trade, you would have made 83.8 pips. And if you took that with a standard lot, so you'd have made 83, yeah, 83.8 pips. If you're trading one standard lot, it's going to be 10 bucks per pip. So 83.3 pips times 10 bucks, you would have made 800 and yeah, you would have made $838 USD with that one trade. So that would have covered, your strategy subscription, or like times what, like 3, 4, and that's just one trade. And you can do this with any pair. And say if you wanted to enter the normal strategy, you didn't even want to enter the pullback strategy, there's a valid entry right here. So if you were doing the original strategy where it matched up, it was red and red, you would have entered right here, and then you would have made 112.6 pips. So if you took this one trade, you would have made $1,126 just this one trade. And look, say if you enter 2 trades, so you would have made profit off that. You have another entry right here where it matches. It's red and red. You would enter this trade right here. You would have made another 1,000. So within, let's see. So within one day, you would enter this on the 12th. You would have entered this on the 13th. Like one full day, one full 24 hours, you would have made 2,000. Just using a simple strategy. All you got to do is match colors. I mean, how hard is it? You match red with red, you match green with green. You match colors, you can make money. All right, let's see. See if you have any other questions here. Yeah, Tracy. So Tracy, did that help? If you need another example, we could do another one. Matt, is this all and more covered in the courses and stuff? Yeah, same exact thing, but I have more concise. Like I just have the videos where I'm not answering questions. I'm just breaking it down for you, exactly how everything is explained. It's real easy. I mean, the original strategy, you just match colors. So if it's red and red, you'll enter a sell. If you want to do the pullback, if it's opposite, you just enter. It's the same exact strategy, but it's a different entry. Let's see. Does anyone use other brokers besides Alanda? I don't use Alanda. I use forex.com, TD Ameritrade for Forex. And then for indices, I use Hugo's Way. But I only use that for indices. I don't really like using offshore brokers. And that's why I withdraw my money every day, if not every week, because offshore brokers like to play with your money. So if you're going to run into some problems, I mean, you're going to run into some problems if you leave your money in there. So I don't recommend using offshore brokers for any big accounts. Let's see, Jermaine. Let's see, you think US 30 is going to keep dropping? I let you guys know sometimes when I scalp, the only problem is that US 30 moves way too fast. So by the time I tell you guys the scalp move that I'm making, I already hit profit target. So unless you're fast and you can like pay attention when I'm making trades, then you guys are gonna miss like the entire move. Like I can show you guys. I use the same exact strategy, but I use it for on the smaller side. So let me see if I can pull up something here. So yeah, right here, if we were trading like US 30, what I would do is I would set up the big move first, which is like right here. So we got a valid K2 entry right here, where it's red and red. I would zoom out. I would place the big move. So this is the big move. We're looking to hit 7,557 pips here. So this is the big move, but I don't ever take the big move because that's a big risk. If you're trading this, you're going to be risking like about 7,000 to make 7,000. So instead of taking this big move, I'll set up the big move and then I'll go up on the smaller charts, like the 5-minute, and then this is how I scalp it. So we already know that the buys are sells here. So what I'm going to do here is I'm going to use the K2 Pullback Strategy. So I'm going to be waiting for a buy signal, and then we got a buy signal right there. So I'm going to do the same exact thing that I do on the big time frames, but on the small time frame. So I'll zoom out, set up my profit target right here. So if you guys can see what I'm doing here, this is the big move, the big square, and then I got the small move right here. So instead of risking 7,000, I'm risking 2,000. So let's see if this hits. So it's above entry right now. It hasn't triggered. Looks like price came down, triggered it. So we might be in the trade at this point. It's coming down, and then we go. This is a 5-minute chart. So if you took this trade, we would have entered somewhere around here. And then, so this is like 1, 2, 3, 4. This is about 15 minutes. So in 15 minutes, you would have made $2,738 because if you're trading indices, generally it's about $1 a pip. So, doing little to no work, you would have made $2,738 in about 15 minutes. And you guys could just keep doing this over and over again. This is how I keep winning, like, those small little profits. So now we can wait for another. I mean, damn, it hit full profit. So shit, if you took this, if you took both, if you took the full move and then you took the small scalp at the same time, you would have made, man, this is crazy. I should have taken, I don't even think I took this trade. So this trade would have been, for the big move, you would have made 7,557. 557, plus the little move right here at the scalp. If you put in 2 positions, you would have made 2,2738 plus 27. Shit, 2738 plus 7557. So at about, let me see, you were holding this trade for an hour and 20 minutes, you would have made $10,296. And it's as easy as that. I mean, the K2 strategy works for all assets. You could trade it, you know, forex, gold, silver, indices, whatever you want. So I mean, yeah, that 150 subscription would change your life, honestly. So let's see, what else we got here? Do you think US30 is gonna keep dropping? Oh yeah, Jermaine. So that analysis that I went over, I mean, it basically showed how fast it moved. So the thing is, if I posted this scalp move right here, and you didn't look at my post, you know, within the first 10 minutes, you would have missed the entire move. You would have missed out on $2,000. But the thing is, if you had the strategy, you don't have to rely on me because you could just apply it yourself. Like, like there's really no need for you to really follow my, you know, my signals. Like the signals will give you extra confirmation because then I'll be giving you something that you see yourself and you're like, okay, that's got to be a good trade. Because if Sean says it's a good trade and I say it's a good trade, then, you know, obviously it's a good trade. But as you can see here, it moves way too fast. You would have, if you were waiting for me to put a signal and you missed out on when I posted it, then you would have missed out on some money. So that's why sometimes I post the signals, but I don't always post them because it moves just way too fast. So let's see what else we got here. Matt, what do you recommend minimum starting? You can start, if you're trading just currencies with us, you can start with as much as you want. But if you want to trade indices, you're going to need at least 1,000 because like right here, like this was a scalp move, but this scalp move was worth 2,000. So the thing is, if, you know, if price swings up a little bit, like up to here, you would have got stopped out already because you would have lost 1,000. But the thing is, you know, this strategy works so well where we catch momentum where it doesn't even go in the negative. Like with a small move, it triggered our order and went straight to profit. Same with the big move. The big move, we would have placed the order like right after this candle. So as it pulled up, you would have caught the move here and it would have retraced just a little bit. You see this wick right here? Just a little bit. So you would have been, you know, in the negative 218 bucks for like a minute. And then right after it shot straight down to profit. So you would have went from negative 200 in a minute, and in about 15 minutes would have been 7,500 in profit. And that's the reason why you need a big account when you trade indices, is because you need to survive, you know, these little movements that pull back a little bit. It's not that you're risking all the money, it's just that you need enough capital so you don't get automatically stopped out. So let's see what else we got here. Jermaine, you're only scalping US3. What about now? You could use this on any indices, the same thing. If you look at all the indices, they all move in the same direction. So let me go to the 30-minute. The reason why I like trading US30 is because it moves fastest. So, you know, I'm not trying to risk myself sitting in the trade for, you know, an hour on end. Like I'm trying to get in and out within minutes. Like I want to get in, make my 500, get out, rinse and repeat. Just do it all day. You know, and that 500 adds up. You do that 2 or 3 times, and then you'll be at 1,500 for a day, doing literally nothing. Like, you know, I'm sure you can stare at the chart for a couple minutes, make some money, and then go on with your day. So let's see if we go to yeah. So if you want to trade the Australian 200, you can do the same exact thing here. Let's see, so I'm gonna pull back to. I mean, these all work because these are all winners right here. But let's go to right here. And then, so this is going to be a valid entry right here. Yeah, she got some leeway. So we're going to enter the big move right here. And then if you want to scalp it, see, this is going to be 1,854 pips. The difference with the Australian dollar, the Australian 200, is it moves a lot slower and it's not worth as much. So that's why the pip count is a little smaller. But I mean, it works the same way. You go to the 5-minute, and we already got an opposite signal right here. So we'll see if we can find another one. Okay, so right here, it's the same thing that I just went over with US 30. You got a pullback entry right here. Just zoom out. Put your short position at the low. So for this move, we're trying to make $870 off this move. The big move, you're making, 1,800, 1,854, but right now we're going to focus on the scalp. So at this point, we haven't entered the trade yet. It's above the entry. Right there, it triggered it. As you can see, price went down, triggered the entry. So now we're in the trade. Right there. Money. So we would have hit profit target right over here. So even if you're trading, a slower moving indice like the Australian 200, you still can make money doing the same exact thing. So we entered right over here. We held this trade for about 2 hours. It's a slow moving pair. So in 2 hours, you made $870. And then, you could put in two positions. You could have a scalp move, or you could have a big move, or you could have both. It's really up to you. But you guys are gonna be risking a lot if you're trading indices. So you guys got to be careful with this. You can't just be taking, every single trade. You got to make sure that everything matches. Let's see what else we got here. I'm pretty sure not touching. Yeah, for sure, Matt. If you don't have at least 1,000 in your account, don't even look at indices, because you're going to be tempted to get in on it. But if your account's too small, you're going to get automatically stopped out. So starting following signals. Yeah, that's fine, Matt. You're not going to make as much money because we're only recommending that you risk 3%. So if you have 150, you're only going to make $4 or $5 per trade, which it seems like a little bit, but that's going to keep compounding. Because what do? We send like 20 trades a week, sometimes on a good week. So you can multiply that by 20, and then you'll flip your 150. 240, and then you just keep compounding that. Because if you look at our results, I'll show you guys the results. So for the year, just for Forex, we had 160 wins, 46 losses, and then we're up 7,084 pips. So if you took that with the standard lot, you would have been up 70,000. If you took that with the mini lot, you'd be up 7,000. If you took that with the micro lot, you'd be up 708. And this is just from copying our signals. You don't even apply the strategy yourself. You're just copying the signals. Same with the indices. If you're trading indices with us, we have 10 wins and 2 losses for the year. We just started trading indices early March, last week of February. And we're currently up 33,555 pips. So if you took that with the smallest lot size, 0.01 micro lot, you would have made a total of 33,555 in profit. But if you add that together and you just copy our trades and you didn't even, you weren't even applying the strategy, you would have made a total of, if you're trading, say a standard lot, you're trading standard lot with the Forex, you'd make $70,084 plus the indexes. You'd add another 33,555. So it's only March 20th. If you took every single trade that we shared, you would have made 100,000 by now. So, you're going to need a larger account, obviously, to trade a standard lot or trade indices. But if you're trading for real and you're really doing this properly, as we're advising, you can make a ton of money in just a few months. Even if you're trading a smaller account. So say if you're making 7,000 in a few months, or not even, it's only March, so it's only been 3 months, less than 3 months. That's still a lot more money than a lot of people make quarterly. So let's see what other questions we got. Could you on your computer and trade on your computer? Yeah, so generally I'll do the charting on TradingView. I'll enter the trade on TradingView, and then I'll monitor the trade and make adjustments on my phone. So it's a lot easier. Um, well, it's a lot easier if you're using forex.com or TradingView, because then when you make adjustments, all you have to do is change the numbers. You don't have to. Let me show you guys an example. Yeah, so if you guys were to enter a trade, all you gotta do is put the pips there. You don't even have to put in the numbers. See, that's the thing that I don't like about MT4 is you gotta put in the numbers, and it's like you can mess that up really easily if you put in the wrong number. Like if you're only off by one number, you could be off like 100 pips. But when you're using forex.com, all you gotta do is put in the pip number. So 50 pips, the price gets automatically adjusted for you. You don't have to do all the hard work, and then it shows you how much profit you're risking. Like I'm sure if you guys use MT4, it doesn't do that for you. It just tells you the number, like the price number. But you don't know how many pips you're risking, and you don't know how much money you're risking. You also don't know how much risk you're taking. Right here, taking 4% risk. You want to say 3%, you just put that in, automatically changes your position size. So all the work is done for you. Do you, so Devaj, could you possibly go through some other trading strategies? I'll come back to that question a little bit, Devaj. Let me see if there's anything else related to K2. So the opposite candle is the retracement candle. Yeah, that's right, Tracy. So it's a retracement candle because we're so for so the reason it'd be a retracement candle is because so you can see here how it's trending down pretty heavily. It's a retracement candle because whenever a signal goes opposite of the trend, it's basically just indicating that it's retracing up, as it did right here. All it is, it retraced up a little bit, and then it corrected back down to the overall trend. So you would put like your order right here or your order right here, and then you just write it back down. Can you leave your Telegram in the room so I can message you and get all the Yeah, if you go on Telegram, or I mean, here, I'll just give you Telegram. These are the public Telegram. So that's gonna be the public Telegram. If you go in there, you'll see me on there. I'm just K2 Trade, so it'll be easy to find me. What were the brokers? Yeah, Matt. So for Forex, I use Forex.com and TD Ameritrade, but I don't recommend anyone else use TD Ameritrade unless you already have an account with them. They're not really focused on currencies anymore, so I don't really recommend them to new users unless you're already familiar with the platform. So I would just recommend Forex.com if you're trading FX. If you're trading indices, I would use Hugo's Way. That's what I use. Which trading view package do we need? So you can use the free one. You don't need to upgrade your trading view. The only reason that you would need to upgrade your trading view is if you want to set alerts. So the thing is, I have an alert for every pair, and I have a ton of pairs here because I want to know, when there's entries. I don't want to miss anything because if you miss on anything, you're missing out on money. So I usually just keep, an alert for each one. But if you're on a free account, you can set up 3 alerts. But then obviously, if you only set 3 alerts, you're gonna miss out on so many trades. Like I have about 24 currency pairs here, and I have an alert for every single one. And then I also have an alert for all the indices that I trade. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9. So I have 9 alerts just for indices. And then those right here, Bitcoin and XRP. I have 2 for those. And then for commodities, I have one down here for UK oil, US oil, gold, silver, platinum, and what's the other one? Yeah, pretty much gold, silver, and platinum. So depending on what you want to trade, you want to make sure you don't miss any trades. Yeah, you're gonna have to upgrade to a bigger plan. but depending on how many alerts you want, that'll be the level that you'll upgrade to. Okay, how do you know it was going down? Which one are we talking about? How did you know it was going down? Yeah, Steve, all of the US scalp orders, or I mean, yeah, the US scalp sells that I showed earlier, we're using the same exact strategy. It's just one or two. It's the first strategy, the original one, or the pullback strategy, same exact one. Different entry points. Yeah, so basically just the indicator shows you everything. Because the thing is, if it's giving you a sell signal like it did right here, so it's giving the thing that the indicator does is it demonstrates the direction of momentum. So when you get a sell signal, it's telling you that momentum swinging this way. I mean, it's the same with buy. So if you get a buy signal, which is a retracement opposite of the trend meter. So if you get a signal that's going the opposite of the trend, it's basically just telling you that, price is just retracing in that direction or pulling back in that direction. But the correct direction is down because you can see down here it's all red. So the overall trend is going to be sells. So like I never trade against the trend. And if you go with the momentum and the trend, like you can catch big moves. Like right here is an entry. It's red and red. So it's telling you that it's a strong momentum downwards. Enter this, make like 80 pips. Same right here. Your swing up, your stop loss over the previous swing was, you can make 93 pips, close to 100 pips. And then you just keep doing it back and forth. Like here, I'll show you here. Like this is how many entries you can make here. So there's one right there. 109, you would have made $1,009 from that trade. If you're trading a standard lot, same right here. You enter this trade, make another 1,000. Same right here. This isn't a valid one. It's not red down here. Same with this one right here. Enter a sell, another 1,000. Same right here. Enter another sell, another 1,000. I mean, I could do this all day. It's real simple. So yeah, if you took these trades right here, it was on March 16, on March 18. So in 2 days, you could have made 4,000. And that's only this pair, odd CAD. And I have 24 pairs here. If you trade odd CAD, you would have made 4,000 right there in 2 days. You're trading odd CHF, same thing. Like how much money do you want to make? 76 pips, so that would have been 700 right there. You want to do it again? Right here, it's a valid entry. 77 pips, so that's another 700. So a valid entry again. 800 right there. Another valid entry right here. So we have 1,347. I mean, you could literally just focus on one pair and trade that. There's another 1,189. And then that's it. Those are all the sell signals, all the valid sell signals. So you can see how they match here. It's red and red, entry, red and red, entry, red and red, entry, red and red, entry, red and red, entry. I mean, it's simple. All you do is match colors. You can match red and red. You can make a couple thousand in a couple days. Let's see. Matt, how do we get that K2 indicator or learn? You just go on our website, k2trades.com. Depending on what you want, if you just want to copy my trades, because I share all my trades to the premium signals group, you can click on this right here, and it'll take you to the premium signals page where you can enroll. I mean, this is a little cheaper because you're just copying my trades. $50 a month, 500 for a year. You make that back in about 1 or 2 trades. So, personally, I think it's a good investment. If you want to get access to the indicators and the strategy, you just go on our website, scroll down. You have a trial going on right now. For your first month, it'll be $50. Every month after is going to be $150 normal price. A lot of people have been saying that this price is too low. So we're probably going to be raising the price probably by next week. Because if you think about it, it really is too low, because I just showed you guys how many trades, 1, 2, 3, 4, 5, 2,000 each. Like we could have made, what's this, 12? Like in about, because we're not going to count the weekends. We got 1 day, 2 day, 3 day, 4 day. So in 4 days, you would have made 1, 2, 3, 4, 5, 5,000 in 4 days. If you're trading standard lot, you know, that's going to cover your 150 a month in like less than a day. All right, let's see. When's the best optimal time to trade? The best time to trade would probably be the New York session and the London session. Usually, what I like to do is I like to look for trades or decent entries around London, because that's when it's slow, and it'll give you entry points where it's not moving like crazy. But once it hits London, that's when you get like crazy volatility. So I mean, it probably happened right here. So let's see. So this trade happened around. This is during New York. It's 10 a.m. So this is around New York session. This trade was 9:30 New York session. This trade was entered at about 11 p.m. So you'd enter this right before it hit London session. Once London hit, price started picking up. Volatility started picking up, and then you go straight to the profit. Let's see, right here again, 11 o'clock. So you enter the trade around 11 o'clock. Starts to pick up around midnight, which is when London opens. Straight to the profit. Same here. You enter this trade around, looks like 5 p.m. So it's a little slow from 5 p.m. until midnight. 24 midnight, that's when London opened. And straight to profit. So yeah, there's no specific optimal time to trade. You could trade 24 hours a day, but when you're going to see real movement is going to be during New York and London. But it's good to set up the trades before those sessions open up, because at that point, like, you're pretty much just waiting for it to hit profit target. What time is the real movement? What do you mean by that, Jermaine? Like, what time does it really move? Like, what time does price move? Price is going to move during New York and London, because those are the biggest markets. Like, Tokyo is like probably a quarter of the size of a market that New York has. Like, London obviously has the biggest market, and then the next one is going to be New York. So London's going to be the biggest, and New York's going to be the second biggest, and then the smallest is going to be. Sorry, I'm looking at the chat. The smallest is going to be. It's going to be Tokyo. Oh, what time is New York session? It's going to depend on where you're located. So you could there's a website for it, so I can find it. You can go to FOREX time zone converter. You just put in your time zone. I'm located in California, so I'm going to be Pacific. So America. Yeah, so I'm U.S. Pacific. So these are going to be the time zones for me. So London opens at 5 a.m. I mean, not London. New York opens at 5 a.m. London opens at 1 a.m. So London and Germany are the same thing because they're Europe. So technically, the London session will open at midnight for me. New York session opens at 5 a.m. for me. And then Sydney and Tokyo are clumped in as a Asia session, so that will start at 2 p.m. for me. But it's gonna be dependent on where you're located. The trading system, it has the trading view indicators and stuff. Yeah, I'll show you right now. All right, so this is what the course looks like. So when you sign up to the strategy, you're gonna get access to this course, and so protection of the trading system, the trading indicator and stuff. Yeah, so I have videos here explaining everything. If you don't have a trading view account, I explain here how to get a free trial for 30 days. You can get the highest count, and there's a video here explaining how it works. Next, like basically when you start the course, you're gonna do it from the top down, and then I explain everything step by step what you need to do. So I have a video here explaining what you need to start trading. It's basically gonna tell you, which trading view account. It's gonna explain what are the different types of accounts, and what are the benefits of each. Next, it's gonna show you, how to set up trading view for K2. So it's gonna tell you how to set it up exactly how my charts look. So normally, normally your chart won't have any of the stuff on here. It's just gonna be blank. But then it'll tell you how to add the K2 indicator, how to add the support and resistance, and how to add the K2 trend meter. These are the three main indicators that you use. You don't need anything else really, just that. So next, I also have a video here explaining, how to set up trade alerts. It's pretty simple. And then here, it'll have different versions of the strategy. So this is the original strategy. So but then over the years, I had comments by users to make things a lot simpler. So we've got our version 2 when I created the trend meter. And then next, we have the version 3 where I created the K2SR indicator. I'll also explain the pullback strategy. This is the strategy we were scalping with. Real simple. Video is only 5 minutes. You can learn this, in 5 minutes, start making money. Next, I have the explanation for the K2 trend meter, indicator, swing trading, scalping. I use the exit strategy. I'm going to be making some new videos for the exit strategy to make things a lot simpler. And then we have all the webinars, and then all the chart analysis, and then results, where you can see, previous results. And I think that's about it. We're going to be adding more to the course over time, now that I have more free time. But otherwise, I mean, everything that you need is really there. So Matt, would you say it'd be smart to start using Q signal service before? Yeah, you could. I mean, if you just want to copy my trades, like I'm able to catch all these trades right here. I mean, literally, if you caught, let me see if I can. So we have the results for every trade that I've taken. And if you want to just copy the trades that I'm taking, so if you took every trade that I shared, just Forex trades for this year, if you're trading a standard lot, you would have been up 70,000 already just this year. It's only March. If you're trading a mini lot, which is a lot smaller, you would have made 7,000 by this month. If you're trading, the bare minimum, where you're trading pennies, you would have made $708. So, depending on your risk, you can make a lot. You make okay money, or you can make decent money. So it's really up to you, depending on how much you want to risk. But yeah, Yeah, back to your question. So yeah, if you just want to copy signals, yeah, like this is the results that you'll have if you're just copying my trades. But if you're using the strategy yourself, then you're gonna have, you're gonna have way more trade opportunities because depending on where you're located, I'm located in the U.S., so the problem with that is, I need to sleep too, so I'm not trading during London session where the market's moving pretty fast. So, technically, you could be making double this because I'm not even trading during the busiest time. Let's see. So, yeah, is it okay to set up a trade if you get a confirmation for the pullback? No. So usually, if there's news coming up, um, I usually just avoid the market for about 3 or 4 hours prior, and then an hour after, because crazy things can happen in the market when there's like news happening. So let me see. Aaron, do you remember a pair that had like crazy news? I'm trying to figure out.
Say that one more time.
Do you remember a pair that had like some crazy news that affected the market?
I think it was one of those trades we had lost. I think was it AUD I think it was that one. Or was it not? It was the Euro. It was, I think it was the Euro AUD. We didn't know. It was, yeah, we had got the AUD news kind of caught us off guard. So yeah, it hit stop loss.
Well, yeah, this thing would have won. Well, yeah, sometimes news will work in your favor, but sometimes it won't. So I prefer just to not take that risk. I'll just sit it out because there's a ton of trades to take. Like you're not going to be limited to just taking certain trades a day because there's going to be like 10, 20 entries a day. So if you miss one trade due to news, I would just wait for the next entry. So I mean, you can see here where a trade was heavily affected by news. Like this would have worked in your favor, but I mean, if you're trading the opposite direction, it would affect you badly. So if you're trying to buy a buy, if you entered a buy position somewhere around here, this is when news happened, and right after news hit, it dropped like 200 pips. So if you're trading like a cent or lot, that would have been 2,000 right there. But I mean, you wouldn't take a buy because if you're following my strategy, you know which way to trade. There's no way you trade a buy. It make no sense. I'm trying to figure out where it can fuck you over. I mean, the news worked in our favor in all trades. So I mean, thankfully, like the Boris speech. I don't think that I don't think that was on the calendar though, Bill Raj. I remember we took it and then it just shot up like 100 pips, but we didn't really like you mentioned news. Or you meant let me go back to there. I was gonna say gotcha. So wait 1 hour afterwards. Yeah, so if news is coming up in 2 or 3 hours, I would just avoid it. Just sit out that trade. And then I'll start looking for more trades an hour after. When you mentioned about the news, what would be the reasoning for not taking a buy? For here, I wouldn't take a buy because there's no valid buy entry. I think you might have gotten confused with what I was saying. I said I wouldn't take a buy because the trend down here is telling you to only take sells. So like, there's no way that I would take a buy here regardless. Yeah, the reason to not take a buy wasn't because of the news. It was because it didn't fit the strategy. Yeah, if there's any other pairs you guys want me to look at, go ahead and let me. Okay, so not trading against. Yeah, so I never trade against the trend. I mean, there's people that do trade against the trend, and they usually lose. So, I'm not trying to lose. Like it's way too risky. I mean, you could trade against the trend if you can trade against the trend if you're scalping, for a quick move. But there's no way that I would take a trade against the trend if I'm looking for a big move, because odds are it's probably going to go against you. Okay, so not trading this trend, and if it was green and red. Yeah, so the reason I would take a trade if it was green and red is if it's a pullback strategy. So So as you can see, yeah, so if we go right here, this is when I would take a trade, but I'm not taking a trade in the opposite direction. I'm taking the trade in the proper direction. So right here, you can see that the overall trend is bearish because it's red down here. So this is indicating that price is going to keep going downwards. If I was entering a pullback entry, I would zoom out here, put my entry right there. And that's going to be for 102 pips. If you let that hit, there you go. You would have made $1,021 in about an hour and a half. So that's why I don't go against the trend, because like if the trend is trending downwards, like momentum is moving down in that direction so strong, like it wouldn't make no sense for you to go the opposite way. Yeah, exactly. See, so I would wait. Like news happened right here, and like how I told you, Daryl, like wait an hour. So an hour from there, then you get the green light to enter the trade. And that's why I would enter this trade right here, because it's already been about an hour, 2 hours, and then you could enter this trade and then catch the huge correction downwards and make some money. I saw that there was right here, but the thing with this is that our entry was way back here. So this news wasn't for it wasn't for another 9 hours. So why would it enter this trade right here? The trend is going down, but what is the indicator saying? Which indicator? The one on the bottom. So, the way that the K2 trend meter, this is telling you the direction of the trend. So when it's red, this is telling you that the trend is moving downwards. So let me start. Red from up here. So this trend would be going down from right here, and that's why it's red, because it's showing you guys that the trend is going downwards. It's the same right here. So as you can see right here, this whole area is red. You can see the trend is moving this way, and you can see that when price broke above the trend, or broke above this area, it started to turn blue. When it's blue, that means that the trend is neutral, and that doesn't have a certain direction. And the same here where it is currently. So it's red down here, trend's moving downwards. Let me see if I can show you guys an example of a buy, or not a buy, but an uptrend. So this is a clear downtrend. I think UCAD was trending bullish this week. Yeah, it was. Load real quick. There we go. So if you looked at this chart, you would have seen green down here. So it's telling you that the trend is going upwards, which it did. How do you know what to look for when the trend is going down? You're just matching colors, Jermaine. So if trend is going up, you're looking for buy entries. Trend's going down, you're looking for sell entries. So all you gotta do is match two colors. If you can match two colors, you can make money. So it's green and green. Could have entered this buy right here, made like 200 pips. The same with the sells. So I mean, all you're looking for, if the trend is green down here, you're only looking for buy entries. So you could enter this buy right here, made about 1,800. Another buy right here, another 1,800. Another buy right here, another 1,800. I mean, it's like clock. Just keep doing this over again. Again, 1,500 right there. Yeah, so you wouldn't have entered this because it doesn't match. So did you create the strategy? Yeah, Matt, I created the strategy, the code, everything. It's all mine. Oh yeah, no, for sure. It's super complex. I've been trading for a little over 8 years now. I created this. I started working on this strategy about 5 years ago, and then I finally mastered it about 2 years ago. And that's when I started sharing it with you guys. Well, actually, I just started sharing this with you guys last year, actually. But yeah, I created the strategy. So This strategy is based off momentum, the trend continuation strategy, and that's why we look for the trend. And these indicators are telling you the direction of momentum. So I created this algorithm here that basically tells you, you know, which way momentum's swinging. Okay, so that's the easy part. And if you don't match exactly, hey, Matt. Yeah, okay, Matt. So this strategy is a trend continuation strategy. So, I mean, the first thing you're looking for is going to be, you know, trend, because you're only going to want to trade in the direction of trend. So if it's trending upwards, then you're looking for buys, which down here it's telling you that it's pretty heavily. So that's when these indicators come aligned. So when it comes aligned, that's telling you that momentum's going to swing upwards. So you get this, if you get this signal right here, it's telling you that momentum is going upwards. And then if the trend is upwards, then you'd enter a buy right there. So that's how you write it up. Collect some profit, exit, do it again. Buy signal, write it up, collect some profit, do it again. Buy signal, collect some profit, do it again. It's real simple. I mean, the problem with a lot of people is they try to overcomplicate trading. You know, they try to sound smart, like they know what they're doing and they know what they're talking about. But most people don't know what they're talking about. I've been doing this for 8 years, so I know, I think I know what I'm talking about. But you know, a lot of people like to make things like super complicated. Like they'll have all these crazy indicators and they'll tell you, you know, look at price action. But the thing is, like, you can't predict where the market's going. Like if you're going in the direction of momentum, you know, your odds are a lot better than you predicting where market's going to go and bounce off. Because I know a lot of people try to base their trades off price action, where they're like, oh, okay, it's going to reject off a certain area. But like, I mean, you can't foretell the future, so there's no way that you can really tell that that's going to happen. I prefer to just go with momentum, because you know momentum's so much stronger than any other type of theory that you're trying to match it with. So Jermaine, so the easy part. Yeah, so when I determine the TP and stop loss, so what I do is say right here, early trade, because it's a valid entry. All I do is I zoom out, I hit set chart, and then you click this tool right here, a long position. What this tool is going to do, it's going to plot the previous swings, stop loss, and take profit. So you'll just, if you're following the strategy, it's going to tell you to enter on the open of the following candle for a valid entry. And then you just click there, and then it sets up the trade so that it becomes, so that it'll basically plot where the previous swing is. So you can see here, this is where TradingView determines where the previous swing is. And I just let it determine. I mean, if you want to do it manually, you could. So say if you wanted to enter this trade, so say if you enter this trade right here, you know, if you're trying to figure out where the swing is, I mean, the problem with you choosing where the swing is that choosing where the swing is super subjective. So this could be the swing here, this could be the swing here, this could be the swing here, this could be the swing here. Like there's so many areas where you'll think where the swing's at, but you know, I don't want to second guess. I just let the computer do it for me, and that's why I just do what I just showed you. So I just zoom out, and I'll put the long position, and I'll let it do it for me. And there we go. And then you select them, big profit, easy money. All right, Matt. So you said, yeah, you work in law. Yeah, I was an attorney. I imagine that requires some programming experience and advanced math. Sort of does, not really, because you can just hire a programmer. Like what I did is I came up with the logic. You know, I came up with my thought process. I gave the thought process to a coder, and then the coder coded it for me. So that's how I made these indicators. But the thought process behind it, you know, the logic as to why this algorithm makes these choices are from something that, you know, I'm able to spot in the market that other people can't. Like I can do this without these indicators, but the problem is, you know, other people can't, and I'm not gonna share the secret with people. So that's why people need these indicators. see, does anybody have any other questions? I can go over any other assets or anything really. Interesting, yeah. It's a trend continuation common. Wait, is this? Yeah, it is. I mean, there's a lot of trend continuation strategies, but the thing is, my strategy is based on momentum. You're not going to find any other momentum strategies out there that are as accurate as mine. Like it's not as basic as it looks. Like I make it look easy, but it's not as easy as as it looks if you're doing it from scratch. Because I mean, look, if you so say we take these indicators away, so you guys can see where these momentum swings are. But look without the indicator. Like I'm not sure. Are you able to tell that momentum swinging that direction? Because I don't really. It's like impossible to see by the naked eye. That's what I'm saying. This makes it so much easier for you. Exactly. So this is basically like a cheat code for you, Wow.
Hello?
What are you doing back there? Doing some cleaning?
Nah, but my dog, I don't know. I think he ate some.
Oh, shit.
Dogs be doing weird stuff. Like he used to be sniffing the carpet and stuff and licking the carpet. I don't know. Retarded.
Like wearing some X-ray goggles on the tribes. Yeah, exactly. Yeah, like I try to make it simple so everyone can trade. And I'm
Exactly. FOREX is like complicated.
I know trading isn't that complicated if you have the right tools. I mean, a lot of people think it's like impossible to trade, but I've dumbed it down where you literally, if you can match colors, I mean, you can make money. Green, green makes money. Green, green makes money. It's really not that complicated if you're learning from someone that actually knows what they're doing.
Exactly.
I mean, there's a lot of trading companies out there, but if you ask them to explain to you, what they're doing, like, one time they're totally not going to be able to explain to you.
It's only complicated until you join K2.
No, exactly. Until you get the cheat code.
Exactly. Yeah.
Let's see. I'm still missing something. You said you can't predict the future. Is there going to come a point where the indicator will say buy, let the trend fall short? Let me just let this out. All right, so Jermaine, I'm going to try to read your thing. So is there a point? Is there going to come a point where the indicator will say it's a buy trend? But what if the trend falls short? Yeah, I mean, that's what happened here. Like if you look right here, so what happened here was, let this load. Yeah, so right here, we got a buy signal. And then if we enter this right here, yeah, so if we enter this trade right here, you can see that it was green, and then the trend died down right here, it turned blue. But the thing is, if you're looking at the overall trend, if you zoom out a little farther, you can tell that it's still an overall green. So even though it pulled back a little bit and there's a neutral trend there and the trend started dying down, you can infer that price is still going to go in this direction because it's going to correct to the overall trend, which it did right here, and then hit pop up. But I'm going to try to look for the bad example. So like when it failed, looks like it worked here. It works here. Or actually, we could go forward and see the trend ended up dying, and then let's see. This would be an entry, but you would have hit profit target up here. Let's see if I can find. Yeah, we went through the whole chart. We didn't see any bad trades. I mean, there's bad trades. I'm not gonna lie. There's obviously with any strategy, there's gonna be certain times where you're gonna get caught up in stuff, and you're gonna. Right. So this would have been a bad trade, but the thing is, I wouldn't have taken this because there's news right here. Like that's the thing that I was telling Daryl before. I try to avoid news because it affects the market heavily. I'm trying to find a loser. I mean, it's hard to find a losing trade because the strategy is pretty accurate. Like I'm purposely looking for a loser right now, but how did you get it? It's the same thing that I said before. It's the same way. You just zoom out, and then you just hit this, and you set it up. It does it for your computer. Or if you want to do it manually, what you gotta do is you have to put the stop loss at the previous swing, which is down here, and then you put the profit target. Same. There you go. So that's how I'm able to determine how many pips. Because the thing is, if you're moving it to the previous swing, odds are if the trend's continuing, it's gonna reach the same distance as the previous swing to create a new swing high. Because if you look here, if you enter here, it swung up, came down, and then it swung back up. So you're trying to trade the swings. You're not swing trading because you're trading intraday, but you're still trading the swings. There we go. Yeah. All right. Let's look at that one. Yeah, definitely. Let's go. We got.
Excuse me. Hey Sean, Matt had a question regarding our EA trade on March 17.
Let's see, that's March 17.
Yeah, I think that one had his stop loss. I think that was the one I was telling you about when the news had kind of caught us off guard.
Which one was it? Because all I see are. Did we call a sell for that?
I think with the. Let's see.
It was over 17. So you got. Oh, there we go. Yeah, let's see.
Oh yeah, I remember that trade. No, it touched stop loss, but like it barely hit stop loss. Then it shot up like 300 pips. I remember that one.
Yeah, no, I remember that trade. I think it was this one. Pretty sure. For this one, something was going on this day. I'm pretty sure you guys were active in the chat during that day, but I remember that like price was getting manipulated somehow, or there was news. Yeah, so there's news right here. This is what screwed it up, because we entered, and then news was coming up in about in an hour. So this was our mistake. Like we took this trade, but we didn't realize that news was coming up like within the hour. And this is like a prime example of how news could fuck up the pricing like crazy, because it was like we knew it was going to shoot up, but like the main problem with this was that the news affected it and pushed it down, because I guess it was bad news for the Australian dollar. Yeah, so previously it was a 0.03, and then the actual was 0.42. So and that's why it affected the market. It pushed it down, and then it corrected right back upward. So if you lost this one, but then you took this one right here, I mean, you would have made it back and then some. You could have just, man, this moved like crazy.
Wow.
Like 1,000 pips. See, like it was the bad call on our part, because we forgot to check if there was news, but Price ended up tracking upwards. Also, the bad thing about this trade was that we put the stop loss like way too close. The stop loss was 100 pips, but it was supposed to be at the previous swing. So if we put it to the previous swing down here, it would have been fine. We would have survived that drawdown. But the only problem with that is I don't like putting on too much risk. I mean, for majority of people, because majority of people don't have large accounts like me, and they can't survive this drawdown. To some people, this is a lot of money. Like for me, I would have risked 1,500. Or if you guys are trading a smaller account, it would have been 150. It's a case by case basis, and like for the most part, I don't like to put other people in risk that it's going to be it'll affect their account heavily. Like since I have a big account, I'm able to take these moves, but yeah, for other people in the group that have like under $1,000 account, and if like losing 1,000 for a normal person is probably a lot. For me, it's like nothing, because it's like if I lose that, I'll make back triple, quadruple next time. So it's just the way that I see markets. I see the markets way differently than other people, because I've been doing this for so long, and I'm able to withstand those losses, or not even losses, just the drawdown. But yeah, so this trade, the reason behind this was it was just our bad call. I'm gonna try to find another, like one that actually was bad. Okay, look, so like this one right here, this might have been a bad trade. Let me go back. It's here. Actually, no, this is a fine trade. We wouldn't have taken this one because it's too close to the K2 SR. That's one of the requirements. So the first requirement is a K2 signal. And then next, you just got to make sure that the K2 trend meter matches the K2 signal. And then next, you want to make sure that price is not too close to the K2 SR. And it's like a little too close here. And that's the reason why we wouldn't have taken this trade. So yeah, you can see that price reversed. And that's why we would have skipped that, because it's too close. But you can see here that price came in corrected. So yeah, decided to take this one. There's a little bit more cushion. You would put TP1 like right here, and then the move would be TP2. So yeah. Why is it going where? Let me do one more loss explanation. Why is it going there? What told me to put what where? Oh, the TP, because do you understand how support and resistance works? So the thing is, when if price is getting near, yeah, we put the TP here because if you know how support and resistance works, usually price comes and we test another resistance, price is probably going to come and reject, come back down. So you could put your first TP here to get out right before. So if you see, I would put the first top target a little bit below it. In case price comes and rejects, like how it did right here. So if you enter, say if you enter this trade right here, right, and price came up and rejected off this, you could have caught all this profit right here. So if you took this trade right here, you wrote it up, you would have made 125 pips. If you're taking that with a standard lot, that's $1,270. So wouldn't you want to, bag that $1,000 real quick, and then get stopped out in profit and then just re-enter, or risk the whole thing just to get that extra move? Because the thing is, if you entered this for the full move, I mean, actually, that would have been full TP right there. So yeah, even if this was your full TP, you would put your profit target right below it. Because as you can see here, price came up and then rejected right here. And then it probably pulled back a little bit before it came back up. So as it pulled back right here, if you moved your stop loss right here, or you just exited, you would have bagged that 120 pips. But let's go back to this one over here that I was just showing you guys. So we can, yeah, so right here, you can see where this moved. I mean, in some situations, it's going to shoot up like that. So it's going to be case by case. So let me see what it would look like if we entered this over here. Yeah, so the full move would have been up there. But we could put like TP1 right here, and then this would be TP2. So like if I think, Jeremy, you follow our signals, right? So the way that we advise it is that once price hits TP1, which would be right here, we tell you to move your stop loss into profit right here. So if it pulls back, then you don't lose anything. But if it shoots all the way up, then you get full profit. We technically don't use TP1 as the exit. We just use that to know when to adjust your stop loss and profit. But I mean, if you want to leave at TP1, you can do that too. Yeah, the profit targets are determined by, so the full move is going to be determined by the previous swing. So say if you wanted to do this manually and you didn't want the computer to do it for you, you would just put your entry there, and then you would place your stop loss at the previous swing. But like I said before, you know, it's going to be subjective. Like you can see that this is the previous swing, while I'm going to say that this is the previous swing. Like we're not going to see things the same. And that's why I prefer the computer to just do it for me so that it takes out the guesswork. So if you go and put a long position right here, TradingView is going to tell you that this is the previous swing that it determines because it goes back, you know, all of this data right here. So it can tell you what it thinks is the previous swing is. So right here, this is a swing low, and then you're going to put the TP same distance away because we trade a 1-to-1 risk forward ratio. And then for this right here, I would set this as TP1 just because this is where resistance is. And like, you know, if you look at historical data, price usually rejects off of support and resistance. Like as you can see here, like price broke above here, came down, tested the support, came up, tested the resistance, came down, tested the support, came up. Probably gonna test it again because the trend is so heavy upwards. It's probably gonna break through it because it's already tested it 2 times. So 1, 2, third time it's probably gonna break through. You know, because this basically just shows that people are, you know, fighting to get out of this barrier. And as you can see there, it broke above, and then you would have made, you know, 223 pips off that move. Does that make sense, Matt? Yeah, pretty much. It's just based off the previous swing. Yeah, exactly. It's just an easy way to, I mean, there's a lot of ways to do it. I know like some people use Fibonacci's. I don't really like using it, but you can use that as well to figure out where your stop should be. But I mean, I've been using the same strategy for years now, and it's worked perfectly. So I mean, there's no reason for me to change what's not broken. So I just keep using it. Yeah, pretty much. Everything explained in the video. So if you wanted to, let me see. Yeah, pretty much. So if you wanted to, yeah, if you watch like this video, this will show you what the most recent, so to pull it down. Hey guys, Sean here at K2 Trades. So today I'm going to be showing you guys version 3 of the K2 trading strategy. Basically, this is the same exact strategy, except now we're implementing K2. So it gives you a quick breakdown of how to, you know, put in a sell entry. It's exactly what I just explained, but this just goes straight to the point. Yeah, Matt, if you go to our YouTube, I have a couple of videos there where I'm trading live. I started the live trading room last week, so I'm gonna be doing that every day now. Yeah, Jermaine. So if you want to see the videos, I mean, everything is there. Explains how everything works. Super simple. Yeah, Matt, if you want to look at the, I think I posted the video on the 18th. Search it up here. Yeah, so if you watch this video, it showed my live trading for the 3 signals that I gave out for odd CHF, CAD JPY, and US 30. And for those trades, they were all winners. So if you go on the I'll show you right now. Yeah, so if you look for YouTube, it's basically what I'm doing here, except yeah, the March 19th one, we try to enter trades. I did call, I think 2 or 3 live trades during that trading room, but none of them filled. But if you watch the March 18th one, we have a couple that you can see here that I was in. Yeah, like you can see here, this is a live trade of my live account. Yeah, so it shows that I'm in 200 in profit. It's a forex.com account, not demo. And I was doing this with everyone watching. So I took 2 of these trades. I took this one, and then that was NJ, and then I also took AC. But yeah, basically in this live trading room, I was calling out signals while I was doing the live trading room. So you can see real time, super transparent. I'll show you guys exactly what I do. It's exactly what's taught in the course. I don't do anything different. So if you guys want to trade exactly how I do, it's real simple. There's nothing wrong with the March 19th one. It's just that, we set trades, but they were never filled. It's the same exact thing that we did on the 18th. I was still looking for trades, but those trades were just never filled. There's nothing wrong with it though. All right, Raj, let's go over did it fill because no, it was a pullback entry. Like price never corrected. Well, I mean it did correct, but it corrected like 8 hours later. So the problem with that is, if I'm doing a pullback entry, I don't want to leave the order sitting more than 4 hours because after 4 hours pass, odds are price is probably not going to move back in that direction, and it's probably reversing. So that's the reason why I canceled that one. But I think if you took it, you would have been in profit because it swung back this morning, but you would have had to wait like about 12 hours, and I don't really like waiting that long for a trade to fill. No, I think pullbacks are actually less risk because you have a buy stop order or a sell stop order. So you're actually just waiting for your order to trigger. The thing is, when you're entering the original strategy, you're entering. You have to enter very quickly. You're not waiting for it to fill. You're usually entering at market. So the thing is, you could be caught in some retracement or some pull or some pullback that happens after. But when you're doing the pullback strategy, you're basically just waiting. Like, say this right here. This is a pullback entry right here because it was green and red. Like you set your order right here, but your order doesn't fill until it gets to right here. So as price pulled back, you have your buy stop order right here, and then you just catch it. So once price moves up, it'll fill your order and you'll go straight to TP. If you entered, yeah, so that's the main difference because so right here you'd be entering the original strategy, right? You'd have been caught in some pullback right here, but then it would have corrected and you would have won. But the pullback entry is you have a buy stop right here, so you don't even enter this trade until way down here. So your risk doesn't start until you're over here, but by that point you're earning a profit. Yeah, I hope that makes sense. Does that make sense, Matt? All right, Raj. Sorry, sorry, I've been keeping you waiting. We'll go over some other strategies that I use. Honestly, I haven't used these specific strategies in a really long time, so I might not be applying them properly. But I have a ton of strategies that I've used in the past. But like I told you before, all these strategies are all they're all outdated. It's not something that I use anymore, but they did work for like some point in time. Cool. Yeah, man, it's just a different type of strategy. I mean, it's just a strategy, but it's just a different entry. But it works exactly the same. All right, go Raj. So look, this is a strategy that I used to use a long time ago. This is the Cowabunga strategy. Yeah, Aaron, you ever use this strategy?
Which one?
Called Cowabunga.
Shit. No, sir. Well, let me check it out.
Yeah, I mean, this used to be like, man, I used to use strategy a lot before.
But that was confusing, bro.
Yeah, actually, it's a little. I'm gonna show you something else, though, Raj. This is a little too complicated, probably for you. But this used to be one of my main strategies.
Roller coaster.
Yeah, this was one of the more basic strategies. So usually, what I would do is if price was to cross this, yeah, I haven't used this strategy in a long time. But this strategy rarely shows up though. Like when you take this strategy, you'll probably win, but you're probably only going to see one like once every long like because basically for this strategy you're waiting for price to break past this moving average, and then you want to take. And you know what? I can't even show you this strategy. This is too complicated. There's a trying to figure out one that's like really easy for you. Aaron, you trade head and shoulders, right?
Yes, sir. Head and shoulder, double tops. Those are like the best reversal patterns.
Yeah. Let's see, Raj, are you familiar with the head and shoulders? The chapter. Yeah, never mind. That's gonna be too complicated for you too. I'm not trying to show you any. I don't want to show you any price action strategies because those strategies they're really subjective. Like what I see could be totally different from what Aaron sees and what you see. So it's not really something that I'd recommend. Hey, Raj, so which are you familiar with index strategies? Is there something that you use already? I can probably show you how to do it properly if it's not working for you. Because I do have a lot of these strategies, but a lot of these require like special indicators. And the thing is, you're not going to have access to those indicators because a lot of these are indicators that right, Dilraj, is there any strategies that you personally use right now that that you think should be working or you're not using properly? Because I have a lot of strategies here, but a lot of these require special indicators that you're probably not going to be able to use because you don't have access to them. Uh, oh yeah, I don't even think I had that one set up on mine anymore. Yeah, that was one of the very first strategies that I started learning, um, but it was kind of too simple, so I kind of had to add other things to it. Moving average. I think it might be this one. Oh yeah, basically. Yeah, like for this, I think this is the 50 moving average one. Yeah, it is. So yeah, basically, uh, whenever price would cross, whenever price would cross the MA, you would you take an entry. But I'm trying to figure out. I haven't done this in a long time. Yeah, so price was across below and it was above the cloud, like how it was right here. I'm gonna try to go to like an area where we'll just run through it. All right, cool. What you're doing is you're waiting for price to break above or below the the moving average. So this is the 50 moving average, and say you're waiting for price to break above it, as it did right here. It broke and closed above the 50 moving average. Next, you wanted to come down and break below it because Shimoku's going to tell you what the overall trend is. So right now, price is still trending downwards. So you want to wait for price to break below, which you did right there, and close below, which you did right there. So as you can see here, price broke. So price broke above, closed above. Then price broke below and closed below. So since it's below the Ichimoku cloud, this is demonstrating that price is in overall downtrend. And then you enter a sell position right here. And there you go, you hit profit target. You would have made 23 pips off that move. And then you just keep doing it over and over again. So again, right here, you can see price broke above the 50 MA, closed above it. You're waiting for it to close below, as it did right there. And then you're going to enter another sell. But the thing with these strategies are, they're all like very seasonal strategies. They're not like K2 where you can use them, under all market conditions. Like for these, they only work when markets trending like super heavily. There you go. Aaron, say something.
You hear me?
Yeah, I can hear you now.
Yeah, I switched to my laptop.
Oh,
First I was on my phone, but yeah, I'm on the PC now.
cool. Yeah, so this would be yeah, so this would have won, but man, you would have held this trade for like you would have held this trade for like I don't like holding trades for that long. But you would have held this for like 4 days, and that's why I don't like the strategy because it's not really you're holding for 4 days for 26 pips. It's not worth the wait. Yeah, exactly. A day for 26 pips. Yeah,
Yeah, that's not worth it.
you might as well go find a job at McDonald's or something.
Exactly. 4 days for $260. Nope, I can't do that.
Exactly. But yeah, I mean, this goes to show that the strategy still works, but you know, it doesn't compare with K2. Here, let's see. I'll show you. I'll show you that stochastic and MACD and strategy that I was telling you about. So this was like one of the it was one of the very first strategy that I learned, and I really liked it because I used it when it was good. But the problem with it is that, you know, strategies like this don't last very long. Like, they only last for a certain period of time, and then they start to flop. So for the MACD, I took off the signals. So I just use the histogram, kind of like it bright. Actually, like this strategy works pretty well if market conditions are like really good, but I mean, for the most part they're not. It's going to be hard to come by. Like, what I would do is I would enter when price would cross. So let's go back. Go back somewhere. Here. Yeah. So for this strategy, I would my entries would be based on the stochastic crossovers. So first, you're gonna wait for you're gonna wait for a price to cross over, like it did here. So we're right here. We had a crossover where the green went over the red, and you're gonna match it with the MACD down here, where it's showing that, you know, price is trending upwards. So you'd enter on the open of the next candle, which is like right here, and then you would have won. So we'd have made $10 on that, or 10 pips. But I mean, look, you're gonna see where this strategy goes. All right, so again, right there, you get a crossover with the green. You match it with the overall trend on MACD. And with these are like small movements. It's like, this is like literally scalping. You're not really, and that's how I used to trade before. But I mean, personally, I don't like to scalp anything under 10 pips anymore because it's kind of useless. So you would have got stopped out right there. Yeah, like, I mean, honestly, I don't really see a point using any other strategy except the K2 strategy. Like, there's so many that would flop. So now you could be looking for sell entries, but like, you would have made 10 pips, you would have lost 20 pips. So you're negative 10 right now. There's another crossover right here. So right here, you would enter to sell. You could, right? I mean, this is for this specific strategy. There's and that's why I use, you know, K2, because for K2, I've used so many strategies. Like, you can see all of my templates here for different strategies I've used. And basically, I took the best thing from like every other strategy and I put them into my own K2 strategy. But yeah, if you wanted to, you could cloud instead of the MACD, which works. It works as well too, but it's a little different. Yeah, let's see. All right. Can you show the K2 strategy you just got on? Yeah, sure. Let's see. Go to K2 system. Yeah, like if you match this strategy with the other stuff I just showed you, Raj, it's a huge difference. Um, how the charts look. It's a little confusing, like in my opinion, using so many indicators on one. All right, so let me go through an example. Yeah, so I'm going to show you guys an example of the original strategy. All right, so for the original strategy, so for one, you're going to need a K2 signal present. Two, you'll need a K2 trend meter. The K2 trend meter matches. And for three, you want to make sure price not within 10, 15 pips. So the first requirement, there's going to need to be a K2 signal present, as it is right here. You have a sell signal. Next, you want to make sure that the K2 trend meter matches the K2 signal. As you can see down here, the K2 trend meter is red and the signal is red. So this gives you confirmation that it's a valid sell entry. And next, for extra confirmation, you just want to make sure that price isn't within 10 to 15 pips from the K2SR. This is a K2SR. This indicator automatically plots support resistance for you. And the reason why you don't want it to be within 10 to 15 pips is because price could easily reject off it, like this. And you want to avoid any risky trades where price could reject. So we're going to measure this, and as you can see here, support is 37 pips away. So that gives you enough cushion to make some profit off this trade. So in order to set your stop loss and take profit, you're just going to zoom out, click set chart. You're going to click on this tool over here, the short position tool. And then you're going to plot your entry on the open of the following candle, which is right there. So there goes your setup. So next, you're just going to let it run. And there you go, winner. It's pretty easy. I mean, that's pretty much it. Like, it's the same thing for every trade. Let's go to another one. We'll go to NEO. So you could like zoom out pretty far back. Daryl, usually I don't set a TP1, but the TP1 is just for you guys in the signals. The reason I do that is because a lot of people in the signal group, like, they're not sure how to actively manage their trades, and that's why we put TP1s and TP2s, just to give you guys visualization of where we expect prices to either reject or move in a different direction. But personally, I don't set a TP1. I just go to full profit, and then I move the stop loss and profit, and I use the exit strategy. I don't necessarily use any TP1 or TP2. I just have one full TP. Right. So for this entry, All right, so I'll go back and think I had a sell entry for the Euro USD. Maybe I'll show you a buy. So for Euro USD, I think I showed you guys a sell. Yeah, I showed you guys a sell. So I'm gonna show you guys a buy. What you can. Same strategy, just different direction. So yeah, I'll go right here. We probably wouldn't have entered this trade because it's too close. This doesn't meet the third requirement. So let's go back to another trade. So there's another valid one over here somewhere. All right, so this is cool. So same exact requirements. Original K2 strategy. K2 signal present. K2 trend meter matches. Price within 10, 15 pips. So these are the only requirements that you're looking for. You want to make sure that price, actually you want to make sure that the K2 signal is present, which we do right here. We have a buy signal. And next you want to make sure that the K2 trend meter matches. Down here you can see the K2 trend meter is green. So this gives you a valid buy entry. Next, you just want to make sure that price isn't within 10 to 15 pips from the K2SR. As you can see here, resistance is way down here. So in order to make sure that it's not close on the other time frames, you just check the higher time frames. You go to the 1 hour, price isn't nearby, 2 hour. Price isn't nearby, 4 hour. Price isn't nearby, 8 hour. Price isn't nearby, daily. Wait for a load. Price isn't nearby. So if this happens, this usually means that it's fine to enter because momentum's so strong up that it's probably going to keep pushing. So there's no nearby resistance. So this is sort of a risky trade, but personally I'd still take it because there's no resistance in sight. So when there's no resistance in sight, I mean the distance that it can move upwards is basically, it's like there's no specific area where price might be rejecting, and it could just go up as far as it wants. So I would have entered this one, and in order to set my prop target stop loss, I just zoom out. I use the long position tool to set up my TP and my stop loss. There we go. We set it up for 133 pips. I would have entered right here on entry, and then let it run. And there we go. We hit prop target. So if you took this trade, you would have made 133.5 pips. And if you were trading that on a standard lot, you would have made $1,335. Let's see, is there any other questions in here? Check out anything if you guys are interested. Yeah, Daryl, for that trade, I would have set TP there. Sorry if I already answered this, but yeah, generally, if I was going to send out a signal, I would put first TP at the SR. I did back testing this method, but like. So for me, I actually developed a back testing script, so I can just go back and look at it. If I open this up, Uh, I have a script that I created that does an automatic back test. So I could literally just go back data and I can see how many times it wins, how many times it loses. And, you know, as you can see here, a lot of wins. There's a few losses, but the problem with this backtesting script is that it doesn't take into account news. So the problem is, see right here was a loss, but there was heavy news. So personally, we wouldn't have taken this trade. Yeah, so, you know, winner, winner, winner. There's a loss here. The only reason that there's a loss is because there's news. You know, if you follow the, if you follow the strategy that I give you guys, there should be no reason why you guys are losing. And if you do lose, it's going to be very minimal. It's going to be like 1 or 2 losses, you know, a week, not a month. See, if you look at these, I mean, they're straight winners. Winner, 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 winner. This is a loss because of news. Winner, winner. This is a loss, but it's a small loss. So let's see. You know, you would have lost 13 pips. But the problem with this too is that the backtesting script, it doesn't go back far enough to set up the TP and stop loss. Because personally, I wouldn't put the stop loss that close. So if I enter this trade, see, you would have won this because if you set it up the way that I was doing it, like how I've been showing you guys, price would have never hit the stop loss. It would have just kept going, and then it would have hit a profit target. The thing with my backtesting script is that it doesn't really, it's not very accurate. I mean, it's accurate, but it isn't taking specific market conditions that that you would miss, you know, like this. Like, I don't understand why the backtesting script, I mean, I could see where it came from because the problem is the swing was way down here. But, you know, if I was trading this, I wouldn't make the stop loss that far back because that's pretty crazy. It's only 60 pips, but that's like a huge move. And I wouldn't be holding on to this for this long. Like, even if I took this trade, yeah, I would have been a drawdown right here. But as soon as it went into profit, because you'd have been holding this trade for, this is already like an entire day. I don't like holding trades more than, you know, 6 to 8 hours. So once it hit 6 to 8 hours, once it got into profit, I would have just exited right here and took my profits, like no matter how little, how big it was. But yeah, the backtesting script, you can see it's a winner, winner, winner. This was affected by news. You can see right here. This is a winner right here. It's a winner. I mean, yeah, this is how I handle the backtest. And then the thing is I have all the data here too. So it shows, you know, win percentage. You know, it's 52 win percentage. But the problem with this is, like I said earlier, it counts news. So it's not going to be very accurate. But it does give you a good gist of, you know, what works and what doesn't. Oh yeah, the Raj, that the Cowabunga system is actually really good. The problem with that system is that you're gonna rarely find any trades. I mean, it's pretty accurate, but you literally have to be staring at your chart like all day to find anything. Yeah. Oh yeah, man, this strategy is super simple. You just gotta watch the videos, and once you start to pick up on things, like you'll be able to learn it pretty quickly. Yeah, the criteria is super strict. It's kind of similar to the stochastic and MACD strategy that I was showing you, but it's a little too strict. Yeah, exactly. You got to change the values to meet the criteria, which is, I mean, yeah, it'll be good for you to practice with. It's a good strategy to use, but like for me in the long run, it wasn't very helpful because, you know, I don't want to be staring at the screen all day. Like the good thing about K2 is it'll give you, like, you know, you can set alerts to let you know when there's a valid entry. But the problem with the Cowabunga is it uses so many indicators that it makes it like nearly impossible for you to set up any alerts to let you know only when, you know, there's a valid entry. All right, guys. Anyone have any other questions? Oh yeah, no, for sure. Like, trust me, when I was started trading, and then I would test that strategy, it would take so long. Like I literally have to wait an entire day. Yeah, Matt. We'll be doing this every day, usually in the morning. They're a New York session, so if you're available, yeah, feel free to join. I'm probably going to do a night session and maybe a London session as well. Me and Aaron are located in California. We're Pacific Standard Time, so I'm not sure where you're located, but oh, same time zone. Oh, you guys are UK or somewhere around there. Yeah, no problem, guys. Yeah, I want to help you guys as much as possible. So if you guys, you know, need help with anything, just feel free to let me know, and I could hop on a Zoom call since I have a little more free time now. But yeah, guys, it was a good call. So I have this recorded. I'll try to get this on YouTube shortly. Yeah, no problem. All right, guys. I'll see you guys soon.